What's up guys, welcome to the channel. So in today's video we will be talking about top-down analysis. Top-down analysis is a crucial part of every trading strategy. So what is top-down analysis? Simply being able to read price action across different time frames. Not only trying to read price actions across different time frames, but reading and understanding the price actions across different time frames. So that is what we call top-down analysis. When trying to read price action from different time frames, we have to do it in descending order, not in ascending order. So we will actually get to it as we continue in this lesson today. So pay attention to this video and I hope you get value before the end of today's video. So I got a question. Why is top-down analysis very important? I will give you an example to tell you why top-down analysis is very important. Reading price action across different time frames and understanding where you are in the market and where you are trying to situate yourself as a trader, it's very important to understand. So guys, let me give you this simple example. If price is creating us higher highs and higher lows like this, if price is moving like this is just a simple example. Meaning now price is creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Let's say this is a so if our daily chart is in a dimension, let me change the color of this so that you can see. I'm gonna make it black. So this black it's our daily chart, and then this one is our 1 hour. Let's say if in our 1 hour we see that the market is trending in a uptrend market structure, but our daily time frame we are on a downtrend. So what we should actually be doing is that if we see that our daily time frame is in a downtrend, I have to be looking to highlight our points of interest on higher time frames, so this will be of interest on a higher time frame because we pushed and then we had a pullback and then we pushed to take this low out, and then all of a sudden on the lower time frame 1 hour, this is a 1 hour, the market that's going back to that zone, you see. So but my question now is, would you be looking to trade on this low, on this lower time frame? That's my question. Would you look to trade on this time frame? The answer is no, because on the demand zone here, this is a higher time frame point of interest, because price it's likely to respect this higher point of interest when it gets there, because this is a pullback that happened on the higher time frame point of interest. So I would like to give you two important things you need to know. You can actually start to do a top-down analysis, and what is the first thing you need to understand is the different time frames. And if you look right here on the screen, I have two different time frames, the higher time frame and then the lower time frame, which is this one is the 1 hour. We have different time frames, starting with the second. Like I can see guys, like we can see here we have different time frames on the screens. The ones that you see with the stars are my favorite ones, which I daily use. As you can see, they all align, and we also have different time frames, from starting from seconds time frames to going to monthly. So the ones you see with the stars are my favorite, which I use to do my analysis, and you can see how they have lined up over here. And so firstly, you need to understand the as a trader, once you understand different time frames, the next thing you need to understand is what type of trader you are. You need to understand if you are a scalper, or if you are an intraday trader, or if you are a swing trader. So let's say if in a situation like in this situation, a scalper. If you are a scalper, right, you you'll be only looking to place trades within few minutes and you are out of the market. You have no business with the monthly time frame. Okay, so if you are a swing trader, you hold your trades for weeks, for days. You have no business with the seconds time frame. Okay, so I want to give you few tips before I start explaining. Let's say you are a scalper. You need three major time frames which you will be looking at. Okay, I will give you a suggestion. After that, you can go to the charts and practice. Okay, one thing you will need to understand, you need three major time frames. The lower time frame. So guys, these are the three major time frames that you're gonna be needing to do your top down analysis. It doesn't matter what type of a trader you are, whether you are a scalper, intraday trader, swing trader. These three time frames are the ones that you're gonna be needing to do your top down analysis. Okay, so no matter what you trade, or no matter what type of a trader you are, you need three major time frames, which we have right here. Okay, so what you will be looking for on the higher time frame, at the higher time frames, you will be looking to see the whole structure you're trying to read, market structure. Like I said, on higher time frames, we're gonna be looking to read the market structure. And if we can read the market structure on the higher time frame, secondly, you move to the medium time frame. That's where you will map out your zones. Okay, so once you map out your zones on the medium time frames, you still try to identify your medium time frame structure, and your lower time frame is where you will be looking to place your entries. If you necessarily need the three major time frames you need now as a scalper, like I said, you need three major time frames. And what do you need as a higher time frame if you are a scalper? A scalper, you need the 1 hour time frame as your higher time frame. Right, guys? I hope you guys are with me. Stay with me. I don't want to keep this video so long. So if you are a scalper, you're gonna need the 1 hour time frame as a higher time frame. So you will be looking for your buyers on the higher time frame from now if you look into mapping out your zones. Points of interest where you will be trading from as a scalper, you need to do 15-minute time frame. So you still need to identify the 15-minute market structure and try to understand what price is actually doing on a 15-minute time frame. Now if you want to look for an entry as a scalper, you go down to your 5-minute time frame, and you can equally consider the 1-minute time frame if you wanna take those snap entries. But if you are an intraday trader, maybe you hold your trades for one full day and you are off. You don't trade for a few minutes, you trade for a few hours in a single day. So these are the list of time frames you should be looking at if you are an intraday trader. Firstly, your higher time frame should be your daily time frame. Look for your bias on the daily time frame to see the direction of the daily time frame. Then you go down to your 4 hour, the 2 hour time frames. That's where you will be looking for the market structure and understand what the market is saying on the 4 hour and the 2 hour. Then you can equally map out your zones there. Now if you want to take your entries confirmations, you need to confirm to enter a trade. You can go down to your 30 minutes time frames or your 15-minute time frame. You can look for your entries at those areas. So if you you can look at your entries on those. So moving to, if you were a swing trader, if you are a swing trader, you are going to look to hold your trades for a week, for a month. Here are the time frames that you need to consider. Firstly, you need to consider the monthly time frame to see where price is heading to. Then you go down to your weekly time frame, on the daily time frame, to map out the market structure and your points of interest. Now where you will be looking for your entry point confirmations or trying to find entries is on the 4 hour time frame or the 2 hour time frame, guys. So okay, so this is it for different types of traders. I hope you know the type of trader you are, and you know if you are a swing trader, a scalper, or an intraday trader. Now I have given you the list of time frames. So we do a top-down analysis in a descending order, means that we will be going from higher time frames. After looking for a higher time frame, we come to our medium time frame, then we go to our lower time frame. We don't do it in ascending order, meaning we don't go from lower time frames, then we move to medium time frames, then we go to our higher time frames. Instead we do it from higher time frames to medium time frames and lower time frames. So let's do a top-down analysis. Today's lessons has two areas which I will be touching on, and the first thing I will be talking about is how to catch trend reversals. Okay, doing top-down analysis and trying to know when the trend is about to reverse. And secondly, the most important thing, which I know you are all here looking for, is to know how to get trading setups by doing top-down analysis. So you need to understand the first one, which is how to catch a trend reversal, before you can know how to get a trading setup or opportunity. And by understanding top-down analysis, the first thing is trying to catch trend reversal. Let's say in this situation, let's say, guys, this black one is our daily time frame, and this one is our medium time frame, which is our 1 hour time frame. Let's say on our daily time frame, see that we are on a downtrend. The market pushed low, and then it pulled back, and then it pushed lower to move low here, and then all of a sudden what we see on a 1 hour time frame is this uptrend here. But all what we have to notice is that, guys, remember that higher time frames points of interest are always likely to be respected. So we always have to mark our higher time frame points of interest. As you can see here, on the daily time frame, the market pushed low, and then we had a pullback and it rejected, meaning this is a point of interest on a higher time frame. Meaning when the market is trading on the downside on the higher time frames, in the medium time frames, what you are likely to see is a trend like this, right? So what I'm trying to say is, guys, if we're having a downtrend on the daily higher time, we will be moving on higher highs, higher lows. This is a trend. You see something like if we move to our medium time frame, which is, let's say in this instance you are an intraday trader. If we move to our medium time frame, all you will see is a trend. It's a trend, but on a daily time, uh, lower lows, lower highs, lower lows, lower highs. You see, so that's that's it. So what you see is price follow, and then it continues to pull back to the downside, and this is in line with the overall market structure. What you see on the medium time frame is in line with the higher time frame, whereas the medium time frame is in a downtrend and the higher time frame is equally in a downtrend. So trading with the trend here is the best thing to do because both medium and higher time frames are in a downtrend. So when somebody says to me that price is in a downtrend, the question I usually ask is on what time frame is the price on a downtrend, because we have different strengths on different time frames, and the trend you see in the higher time frame is not the trend you see on the medium time frame, and the trend you see on the medium time frame is not what you are going to see on the lower time frame. So let's say price creates a lower high, right, and you want to catch the reversal, you just need to wait for the change of character. What is the change of character? That the market was moving in an uptrend, and all of a sudden the market starts to create a new low after we created a high here. So this means that we had a break of structure there, and what you should simply do is you should just wait for a change of character. It happened, we created a high and then we started to create a new low with a break of structure. And I hope you understand exactly what I just explained right here. I know I tried as much as I can to break it down for you to understand. So remember, I said today's lesson has two parts. The first one is trying to catch trend reversals. Now we will be moving to the main topic while you are here. How to get a trading setup or opportunity while doing a top-down analysis. So if you want to catch a trading setup while doing a top-down analysis, the first thing you need to do is, you have to do, like I've always said, is to go down to your higher time frames and see what is price doing, and understand what is price doing. So I'm gonna be moving this drawing. I'm gonna be moving these drawings here so that say it is instant, guys. The market is trending, up. It's an uptrend on a higher time frame, right? Let's say in this instant the market is trending up on a higher time frame. On a higher time frame, the market is moving like this. So I'm gonna be using color. Yeah, I'm gonna make this one black because this is our high time frame. Let's say this is our daily time frame. In this, you are intraday trader, and this daily time frame, and the market is in an uptrend structure. So in this case, you have to be looking for a break of structure. Like I said, guys, if this is a higher time frame, on our medium time frame, we're gonna be having a downtrend, the opposite of what was just on the screen, but this one is just mention the color here. Just want to show you the medium time frame. We have to wait for its break of structure. All we have to wait for is break of structure to the upside, and you can actually go down to the medium and lower time frames, look for a change of character. Like I said, guys, the market is likely to reject our higher time frame price of interest. So when the market gets to our higher rates of interest, all we do for that we see that the market created a low and all of a sudden create a new high. This is a change of character, a break of structure, and it's a change of character because we structure we created a low and then we broke the structure to create a high, and now the market is pulling back from the higher time frame points of interest. And it's important because it's so simple that higher time frames points of interest where you will be waiting for trading opportunities, that's where you will be trading, where on your higher time frames. So what I want you to notice is that you understand that price was in an uptrend on the daily time frames and you try to get to an entry and you trade this pullback to the to the upside. As the higher time frames will give you the directional bias and you will understand where price is moving to and what price is likely to do. Now the lower time frames you understand where price is pulling back to and why price is actually pulling back, and you understand everything. When price gets to higher points of interest for entries confirmations, you move to your lower time frame. Understand and look for entries confirmation. Remember to trade in line with higher time frames, aligning with the overall structure. Okay guys, so now what we will be doing, we will be going to the chart. Just move these to not make my chart messy. Okay guys, moving on to the chart, we see the chart daily time frame, meaning in this situation I'm gonna be doing this top-down analysis as a day trader, which is an intraday trader. In this situation, our higher time frame is our time frame. If I zoom out to see the market structure of this higher time frame, which is clear, the price is in an uptrend. Now we have to highlight our points of interest where price is likely to go. So we can see that this market it's in an up.
Can see that this market is in an uptrend, creating higher highs, higher lows, higher highs, and now we had a pullback on a higher time frame. So what should we be doing is that right here, the overall market structure, we can see that it's in an uptrend. So all we're gonna have to do is we are gonna have to actually move down to our medium time frame, which is our 1 hour, right? Because on our daily we can see right there that we had a pullback, but the overall market structure is a uptrend. So moving to the 1 hour time frame, we can see we are actually moving in a downtrend, creating a lower lows and lower highs. That's where on our 1 hour we're gonna be mapping out our zones to confirm whether this trade is gonna be taking it. So we can see we having lower highs and lower lows over there on 1 hour, and now the market is starting to consolidate. Let me zoom in. We can see there that the market pushed, creating a new lower high, and then we went back. We couldn't create a new lower low, but we went up after that, having a break of structure, creating a new higher high over there. And after we created a new higher high, we had a change of character. Look how price starts to behave, right? Because uh, I believe that on our higher time frame, the market is now at the point of interest. So when we go to our lower time frame, 15 minutes, we can see over there we had a clear break of structure on a 15 minutes, and now the market went to pull back to our first lower low before we could actually create a new higher low. And look what the market is doing. Before we created that, we couldn't actually break our previous lower low. And when we couldn't actually break our previous lower low, meaning price, what it's trying to tell us is that we're gonna be creating a new higher low. But that's for because on a higher time frame, going back to the higher time frame, we can see when we zoom out clear that there is a point of interest at this level right here on our higher time frame zone. The market has reached the point of interest. That's how we see the bull candlestick appearing on our daily time frame. If I zoom in clear, we see that now we starting to have a morning star over there on our daily time frame because we are at the higher time frame point of interest, right? So when we move lower, trying to get opportunities on this pullback on our daily time frame, all we're gonna have to do is just to move to our medium time frame and go to our lower time frame. Wait for those. Wait for the market to give us those break of structure and change of character, right? And from there, we know we had a break of structure on our lower time frame and we created a new higher high, which we had a change of character, and now the market is creating a new fresh higher low. Could the market reject there? There are chances that the market can reject there, but when the market rejects there, what I'll be looking forward to see on these trades is trading in over what was the bigger trend, which is the higher time frame. We saw that on the higher time frame we had a uptrend in the market. Now it's now on the point of interest on the daily time frame, and now the market is giving us confirmations that we could have a clear buy opportunities over here because we had a break of structure on our lower time frame and change of character. You know, as you can see, we're having a break of structure over. So no, right over here we couldn't actually take that high out. We're having an equal lower high over there. But one thing which you consider is that on the 15 minutes we couldn't break, we couldn't pass that lower high which we had, and then the market pulled back. But another thing is that knowing candlestick pattern formations, we can see there we having a inverted hammer, which is a powerful candlestick pattern when it comes to reversals. And where is it actually happening? It's actually happening on our major on our higher time frame point of interest. So on this trade, what we're gonna be looking for, because we already have a confirmation of candlestick formation, and we also have a higher point of interest level being reached and tested right now. That's how we see the bulls. So we're gonna on this. I'm gonna be looking to take buy trades, and then the stop was gonna be below the inverted candlestick, the bullish inverted candlestick pattern. I hope you guys enjoyed this video, and guys, that's it for this video. So my stop loss, is gonna be above that zone. Below that, that's where my stop loss is gonna be. So yeah, guys, I think that's it. And the TP is gonna be, the first TP will be the first higher high on the higher time frame, and then if we take that higher high which was created before we had a pullback, and then the second TP is gonna be the following higher high. So I hope you guys enjoyed this video, and I'll see you guys on the next video. Thank you.